This is Pre-Market Prep. I'm Brianna Valesky with my co-host Joel Elkan, and we're on the line with Sean Udall. He's a tech stock strategist as well as CIO of Quantum Trading Strategies. Sean, thanks for joining us on the show today.
Thanks for having me, guys.
So we were just on the line with Ryan Craver, and he talks retail, he talks about tech, and we were talking about Twitter and Project Lightning. And you jumped in our chat room and said that you have a theory on Project Lightning, and I need to know what it is.
Yeah, I think I pretty much know exactly what it is. So if you are familiar with a product called Zite, Z-I-T-E, another one would be Flipboard. There's a few of them out there, or even the new Apple News app. Okay, so the Apple News app is very similar to Zite and Flipboard. So what you do is you join the platform. They have a list of probably 100, 200, 300 interests. You put what your interests are. I think you highlight your top 5 or top 10 interests. And basically, it curates sort of an RSS newsfeed. So what I believe Project Lightning is going to be, and this is going to be beautiful, by the way, is pretty much a curated newsfeed based on your selected interest for Twitter. And you know, I'm kind of stumped as to why people are somewhat confused. Twitter has detailed or given some pretty decent hints as to what this is going to be. So. And every time I've heard them talk about it, it pretty much sounds like kind of a Zite or a Flipboard for Twitter. So I would be shocked, absolutely shocked, if Project Lightning isn't a Zite or a Flipboard for Twitter.
How is that different from TweetDeck?
Well, TweetDeck, I mean, I use TweetDeck. And TweetDeck is more of a utility that kind of helps you organize your tweets.
Okay.
Into like lists and things like TweetDeck doesn't have, as far as I know, I mean, I've been using it for 2 or 3 years. I don't think it has what I call an interest engine. I don't know if there's anywhere in TweetDeck where you go in there and you really highlight your interests and things like that. It just sort of allows you to organize and use Twitter, you know, much more effectively than kind of a standard Twitter platform. I mean, here's the other thing. I think it amazes me that Twitter's never done this. Okay, so Twitter talks about MAUs and converting the non-user into a user and blah, 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 blah. It's like, okay, guys, you bought TweetDeck. You paid $40 million for TweetDeck, which is a great deal. But how come you don't use TweetDeck as an onboarding option? So in other words, even brand new people right now, before Project Lightning, if Twitter just said, hey, here's choice one, do you want to use Twitter standard, kind of the iOS form or the web form? Or do you want to try TweetDeck out and onboard with TweetDeck? I think they would be shocked at how sticky people were if they actually onboarded with TweetDeck. So, and that's the key too. If Twitter could just, I mean, sometimes it is amazing how obvious some of these things are. But if Twitter could then kind of take TweetDeck plus Zite or TweetDeck plus Project Lightning and have, okay, you have the organization of TweetDeck plus you have an interest graph of your choices now, they have the home run product. So I hope they do that. We'll see. But if you're a TweetDeck user, then you go through the process of identifying your greatest interests. TweetDeck should sort of become Zite on steroids. So they're going to do it. They'll get most of it figured out. Will they have it perfect the first time? Probably not. But yeah, I mean, I think it's pretty clear what Project Lightning is going to be. That's kind of the point I was trying to make.
All right, we got a lot to cover here, Chris. And
Chris,
Sean,
away.
Why don't I call you Chris? Let's go with the global currency thesis that you have.
Yeah, I think it's as simple. So if you really think about what started stocks selling off, what started the stealth bear market that you and I talked about probably as early as February, March of this year, it really was just the strong dollar persistency just kind of got too much for people to handle, right? And it started hitting earnings too hard. It started hitting revenue too hard. And it just became kind of this overwhelming concern. Now, I think the concern was far overblown, but it just was in your face on every single earnings report for quarter after quarter after quarter. So, but that's really the thing that got the bear market started. It's not the thing that tipped it over into Nas down 7%, which became Nas down 17%, but it was the whole thing that started everything. And I actually think if the Fed tightens, and especially if they kind of tighten and say, well, you know, okay, we're going to be pretty cautious on further hikes, I think that actually could cause a lot of dollar weakness. But I think the strong dollar trade is now people are still jumping on the strong dollar trade. This thing's been going on for 14, 16 months. It's pretty long in the tooth. So I think if something happens to where the dollar just doesn't go up anymore, or reverses hard, that could foment either the end of the current bear market or even a new powerful bull leg to the bull market. So we'll see. But I think that's worth mentioning, just because it still seems to me that the consensus thought is that, okay, Fed hikes means dollar's going to go stronger. I mean, I think that's completely missing the mark. I mean, to me, the global currency markets have already priced in about 75 basis points of Fed tightening already. So at some point, that's going to have to be unwound, because the Fed hasn't even done 25 basis points yet. So, and when they do the first 25, I think people will realize, man, the next 50 basis points is going to take a while.
All right, let's going along this theme here. You like to do your homework on the markets, and you're drawing the parallels between the Fed action and activity in 1998, also 2011, 2012, and that's when you kind of had the Fed just kind of spooking the market. That sell-off turned to be a great buying opportunity. What's your scenario this time?
I think we're kind of reliving one or all of those time periods. There's similarities to all of them. There's some eerie similarities to 1998. I mean, especially the currency issue. So we had about a 20% to a 25% Nasdaq correction in 1998. Didn't quite get that steep this time, but you also had the drop was really short, sharp, really fast. And it was almost sort of flash crashy, right? In 2010 we had the flash crash. In 2011 we had the government shutdown BS. I mean, the bottom line is each of those periods wasn't a dead bull market. We were in some phase, and 1998 was probably the seventh inning of the bull market. But man, we're the eighth and ninth inning spectacular, right? In 2011 we're probably only in inning number 3. But each of those periods of time, you had stocks drop 50% when the market only dropped 10 to 20%, and that's what we're seeing today. So I mean, stocks I don't even like, I've been buying. Now GoPro I do like. I just loaded up on GoPro again. If you guys remember, hey, I nailed that GoPro trade 8 days to Sunday. I was buying it cheap this spring, sold it all basically above 50. In fact, some of it close to 60. You started giving me GoPro at $35 here recently. I started buying it again. So I've been buying it. Buy it almost every day. I don't keep the shares that I buy every day overnight, every single night. But I've been building a position in that. I really like that. I mean, GoPro dropped 35 points. It was $65 in a month ago, and the other day it hit 31. Now, if you can't step up and buy a little GoPro there, something's wrong with you. If you have a bullish phone in your body, right? And I'm trying to think, and here's the key with GoPro.
You were also talking about some other last night when we were talking, you were saying these aren't cheap stocks. These are really cheap stocks. So does GoPro go out of that real cheap category? Sure. What else is real cheap too?
Yeah, real like something like a Finisar, a name historically I don't even like. I had a little bit of it that I've been dragging around for a while. But I mean, Finisar was cheap at $17, $18. And, the stock, I think, hit 11 and change the other day. Guess what? Last time Finisar traded there was 2011, 2012. It bounced a little at 1271. But, I mean, here's a stock that doesn't even have to do anything, doesn't even have to report anything really materially good. And it probably edges its way to a 50% return. It'll be a very unsexy 50% return. But all this thing's got to do is go back to 1750, and it's a 50% return. Something like Infoblox, BLOX. Now, interestingly, they had a really good quarter. So they just reported a beat and raise quarter, very good quarter. In fact, the call was even better than the numbers. Same thing. Infoblox was probably close to 30 not too long ago, 17 and change today. I mean, I could go on and on and on. CyberArk, a name I was selling above 60 and shorting around 70, and I love this name kind of between 35 and 45 a few months ago. Traded this very, very well. Same thing. They have not had an earnings report. They didn't smash, and the stock has gone from 70 to 45. Now, that isn't fundamentally classically cheap, but it's very cheap on growth, and it's pretty cheap relative to peers. Something like a FireEye, same thing. I've been buying some of this again. Another name, I pretty much got completely out of it, close to $50. they had one of the best reports in the cybersecurity space. And the stock hit 33s or 34s the other day. I'm not sure what the flash crash low on it was on August 24th. It might have been 30 or 31. I don't know if you could have got filled at that price, by the way. But that's another one. I mean, just name after name after name. We're finding is down 30, 40, 50, 60%. And interestingly, even in 11 though, to get a name down 50, 60%, usually they had to miss a quarter, or there had to be something else. I mean, you have stocks that have just had crushingly good reports. By the way, the GoPro report was amazingly strong. So the difference maybe this time is more like 98. In 98, you didn't have, that's when Cisco was crushing numbers, and that's when, the early days of the fiber optics stocks were crushing numbers. And so it almost feels like this period is more like 98, where you have a lot of companies that dropped 40, 50% that just produced huge earnings beats.
And what about your old favorite Ring Central? Looks like that's run into a little resistance, huh?
That's another one. If you remember, I didn't really like that. I think I closed most of my position out when I think I got about 70, 80% on it. Because I like this in the low double digits. There was probably a 2-day period that would have worked pretty well. I did not buy any Ring back. I think I had a chance to buy some in the low 17s one day. I just sort of missed it. I don't think it's bad here. I do value Ring to a 22.5 to 25 price relatively easily in a decent market. And they haven't missed a beat. I can't remember the last time they really had a bad quarter. So that's not bad. I wouldn't put them up there now. I'd probably favor a little more growthy names or just some stuff that's been beaten up a lot more. I mean, here's one. I think I was on the show one time and talked about how I thought Yelp presented a really good short-term opportunity. And then within a couple of weeks, they got a buyout offer, right? So I got a little lucky on that. And I mean, I think I was buying Yelp at 40 and I sold it on a 10 or 15, 20 or a 10, 12 point pop. Well, Yelp is 25. And I thought it was relatively cheap in like the high 30s. And now it's not relatively cheap. It's flat out really cheap. I don't necessarily think a buyout's going to come, but I think the odds of some talks could kind of crop up again. And this stock has actually been working. I mean, a funny thing has happened, like a new relic, which is NEWR. Now, I missed this one. This thing was 32 just a couple days ago. But I think New Relic is up like 8 days in a row. I'm trying to think of another stock I wanted to highlight. Varonis is really cheap too. That's VRNS. Qualys, QLYS. I think that stock's up 7 or 8 days in a row. Now, they're not big days. Some of those days there might be 15 or 20 or 30 cents or something like that. But, under the surface of what we're seeing right now, I mean, if you can get stocks to go up 6, 7, 8 days in a row, maybe things aren't quite as bad out there as people think. I mean, we've got to get through this Fed meeting today. But the bottom line is I think there's a lot of parallels. And notice, I haven't said I want to buy the NASDAQ, right? I don't really like, buying the NASDAQ doesn't really appeal to me. But buying stocks that are down 30, 40, 50% off of recent highs, that appeals to me.
I know you like to keep a close eye on Apple. That's kind of your little darling here. Had a nice run off the 92. Really seems to be finding some problems here in the 116 handle. Pulling back a little bit today. Quiet range yesterday. Give us your outlook on Apple.
Yeah, I'm still kind of, I can't be as bullish as I was on Apple when I was buying the stock 50% lower. But I think that, I've liked the stock. I have made some trades on it. I mean, anything in the kind of the low 100s, I think, is very gettable. I still think my long-term target, which long-term at this point is probably only like three to 4 quarters away, maybe 5 to 6 quarters away. But I still see the stock to my target's 165 to 185. So in that just sort of that. At 165, Apple would still trade at like a 30% discount to a Clorox, or a 40% discount to a 3M. So if Apple can just sort of trade at a valuation that is still a 25 or 35% discount to far inferior companies, the stock has a lot of upside. The only quarter, so I think this next quarter, I think they're going to be fine. In fact, I think the next quarter sets up pretty well for them. I think the iPhone cycle sets up tremendously well for another 1 or 2 years. The only quarter that could get a little dicey is as we head into the January report, because that was the quarter last year where they sold 74.5 or 75 million iPhones. If they can sell more than 75 million iPhones in Q4 this year, I'm going to be shocked. And so let's just say they sell 68 million or 69 million or 71, which is still an incredible number, and they'll still do 31 or 35 billion dollars in cash flow for the quarter, which is again unparalleled. You might get the bears to kind of come out and make a big deal about that. So, but yeah, I think 115 is okay. I'd rather buy it about 5 to 7 points lower if I could. But I think as long as we're pretty much below 125, it's a good buy. And I think if we're below 110, it's closer to a great buy. And so, I think it's fine. There's other stuff that excite me more just because, again, what did Apple do? It went down about 15, 20% off of highs. I mean, an Infoblox has dropped 50. A FireEye's dropped 35, 40%. A Micron's dropped 60%. A New Relic had dropped about 35%, but it bounced about 20% in the last few days. So anyway, I'd rather hunt where people are a little more scared of the names and a little more worried. And, I think the odds of making 25 to 50% over the next 6 months or more excite me quite a bit more than making, I think in the next 2 quarters, Apple could be a little dicey. I still think it could trade to 132 pretty easily a couple times. But, I don't know. If I think I can make 50% in something with relatively the same downside risk, I'm going to go after that name as opposed to an Apple where I think I can make 15 to 20% with the same downside.
All right, before we let you go, Sean, I mean, we gotta talk about the big Fed rate, the Fed decision today, and I don't know, even Dennis and I are kind of thrown in the towel here, think that they're going to do the quarter point, get it out of the way before the holidays. Really, in the grand global scope of things, it's really not that big of a deal. But what are you looking at, and how are you going to play your cards this afternoon?
Yeah, well, I actually was buying a while ago, so if I do anything, I might be trimming a little bit. In fact, I trimmed a little yesterday. I actually think we're having the Fed is going to raise 25 bips rally. I think that's what the last 2-3 days, maybe even wasn't last Friday. I think pretty strong day. So in fact, we've had some mornings where the market actually opens down. Buyers come in, and then we reverse and go higher, which is a much healthier market than a market that spikes at the open and sells off all day.
Yep.
So, the sentiment, the tone seems a lot different to me the last 4 or 5 days. I think if the Fed basically does 25, I think we rally into the end of the year. It's not going to be a smooth ride, but I think we can rally into the end of the year. The most bullish scenario, would be if the Fed does an 8. I don't think they're going to do that, but I get about a 10-15% probability matrix that the Fed does an 8 raise, which basically they're at an 8 right now, but they would get off the zero bound. So instead of saying the Fed's at 0 to 25, the Fed would say, okay, we're at 12.5 basis points right now, and then the beauty of that is they then have room. They actually could raise 2 or 3 or 4 more times, and nobody's going to freak out because you're still a long ways from 50 basis points. And especially if they say they raise an 8 and they don't, they're going to be fairly deliberate in future hikes. I mean, that effectively, that setup would be like QE 5.8. It'd be, I like to say it'd be QE 3 on steroids. I'm with you guys. I think they do 25. They get it out of the way. Frankly, they should have done it 4 or 5 months ago, and I don't know if we would have had a flash crash. Because again, what have the global currency markets done? They've effectively put in 75 basis points of terminal Fed rate hikes, and we haven't even had 25 bips yet. So I would rather almost see a 25 for the health of the market, because I think they can do 25 and then be pretty deliberate on when they're going to do the next 25. And I think we can get out of this. Oh my God, when's the Fed going to raise? When's the Fed? And here's the 2 worst words I don't want to hear. I'm tired of hearing data dependent. So let's hope they don't say data dependent. So here's the last scenario. They do nothing and say we're still data dependent. If they do that, I'm going to put on hedges fast, because I think, I don't know if there's tremendous downside, but man, I think we're going to go kind of into this crappy bear market again if the Fed doesn't raise at all. So, that may be counterintuitive. I think the guys on the TV all the time, they don't want the Fed to hike, and, the IMF, doesn't want the Fed to hike. I mean, what are these guys looking at? The Fed should have got off zero bound, a year or two ago. So let's get 25 bips out there or an eighth, and at least we get, off the zero bound. I think that would be healthy.
All right, great scenarios here set up by Sean Udall. He's a tech stock strategist and CIO of Quantum Trading Strategies, giving us some cheap stocks out there in his opinion. Also, a look at the global currency market. Sean, always fun talking to you. Great enthusiasm for the markets. Enjoy your detailed analysis. We'll have you on again soon.
Hey, thanks, guys. Have a great day.